afternoon or morning, depending where you are in the world. Afternoon, Mumo, Elevated, Danny, Comfortably, Crumbs, Robert, Mumble, Ryan, Mumble. Nice cookie. Thank you. Virginia, how we doing? It is Wednesday. It is big news day today. Everything is happening today. Massive news today all over the place. We've got lots of stuff to go through. So we'll start off quickly with the news while we're waiting for the market to open. Afternoon, Pleiades. Euro is collapsing. Yeah, it is. Euro is coming down quite nicely at the minute. Not against the Swiss franc, though. But yeah, obviously we know what's going on with the euro. Can't grab that fib, can I? Yes, can. So euro CAD specifically is dropping against the US dollar as well. So it's mainly what you're seeing is some weakness on the euro, but mainly dollar strength and Canadian strength at the moment. But we'll wait and see what happens with that. So long and short of it today is it's double interest rate day. So we've got the Canadian interest rate coming out in about just over 10 minutes. No forecast change. Then this evening, we've got obviously the US rates coming out, no forecast change. This morning's news, basically, we've had very good numbers on GDP, really good numbers on GDP, so 0.5% above forecast. Unemployment came out better as well. Rather non-farm employment change. So basically more people employed, which is good for the currency. So good news for the dollar today so far. Aussie, not good news this morning. All negative numbers for the Aussie. And then we had the GDP coming out for Germany, which came out on forecast. So these are really going to be the big movers today, obviously. It's going to be the press conference and the FOMC press conference for the, for CAD and for the US. So we'll see what happens. We're not expecting shocks on these. But obviously the press conference is where it's at. So that's going to tell us what the forward guidance is. So that's your news coming up today. Tomorrow morning as well, before I come on, in fact, I'm not on tomorrow. So before I come on Friday, which is miles away. But anyway, before the market opens tomorrow, we've got the Bank of Japan rate announcement as well. And retail sales for the Aussie. So just be aware of that. Tomorrow we got CAD GDP coming out as well. That's forecast to stay the same. I would imagine we'll get a good number on that, to be honest. But and then we got PC and unemployment. So big, busy sort of couple of days coming up. So let's see where we are with the indices. There's your opening ranges. Nasdaq's broken long. Just take one on there as well. So long break on the NAS to start with. Nice. We'll see how that goes. But obviously with the Canadian interest rate coming up at 245, you have to be aware there's probably potentially going to be a bit of whipsawing in the indices, long on the S&P as well. So we do tend to get a little bit of uncertainty before a big interest rate decision. Although it's not the US dollar, it does get affected, the US markets, by Canadian results as well. Usually, obviously, because they're big trade partners. However, that relationship obviously is different now. So it'd be interesting to see whether we do get a lot of movement on the US dollar when the Canadian numbers come out. Yesterday was, I think, probably the biggest day I've had on the indices for quite a long time. Huge profit yesterday. Every single break yesterday was clean and straight to targets. So banked 7.5K yesterday. Absolutely awesome day. This morning's not been amazing. The DAX, basically clean break on the DAX up to partial target. I'm still long the DAX at the moment. The FTSE 2 stop outs, so negative on the morning, but we'll wait and see what happens with the rest of the afternoon. We'll see if we can go anywhere. So before the interest rates come out, I just want to look at my positioning on the CAD and the US and get some stuff banked. So I'm short at the moment on the Euro CAD. Obviously, because I've got profit on this, I'm in profit on the overall position. it doesn't make sense to risk all of this lovely profit in case we get negative Canadian news. So obviously I'm short Euro CAD, which means I'm long Canadian dollar. If the Canadian outlook is negative, i.e. they are not going to drop interest rates soon, or they forecast that inflation is going to be sticky and they may have to remain on the same interest rate for sort of the next quarter or so, we're going to get a negative move on the CAD, which obviously is going to undo all of this and get rid of all of this profit. So I'm going to do some closing on these positions, on these Euro CADs, and basically start to do some partial drawdown control as well. So I'm going to take that one off and take that one off. So that's those two positions gone in profit, and going to do some drawdown control on the rest of it. So Bank 570, let's see what lot sizes I've got on these, 0.13, 0.14. So I'm going to close that out completely because that is below the line and that's a larger lot size. And I'm going to do a partial on that. There. There's an argument. Might as well leave that in place. So so there you go. So bank 0.7%, reduce my exposure on the Canadian dollar down dramatically. So that's now in the orange. So no danger on the CAD if it does go the other way, and obviously stuck that in the bank. So basically the idea behind doing this type of movement, why have I got two positions there still on the Euro CAD? Hang on a minute. Maybe I want to shut a bit more. Oh yeah, I've got two profits on, haven't I? Yeah, I'm going to close that one more of those out. I'll close a quarter of that out. Close a quarter of that. That just brings my exposure down a little bit more. So yeah, so close those four positions out basically, and then done partial drawdown control on those. So the average is now there. I'm a quarter of an ADR away from a break even on it. So the idea behind doing this is if this now screams back up again, I can add all this on again and profit from it again. If it screams down, absolutely fine. I will just take profit on it. Yeah. So basically, I'm just protecting myself against any Canadian dollar exposure that goes the opposite direction. So if I get what I'm hoping for is the Canadians are basically going to come out and say everything's going terribly, inflation's going through the roof, we're going to have to put the interest rates up, and then we're going to get a massive strong move on the Canadian dollar. Likelihood is the Canadians are going to turn around and go, we're going to drop interest rates at some point soon, which means the euro will probably pump a little bit against the Canadian. But we might just get that sort of movement when it's neutral. So just making sure that I'm banking some profit, basically. Oil, I'm holding this at the minute. I was hoping this morning we were going to break this high. We didn't manage to. It looks like it's having a run for it now as well. So obviously Canadian is an oil producer, same as the US. So there is a chance we might get that movement there as well. Trump is speaking later. So there's an argument for shutting some of this out as well, but I've decided to leave it all running because it's sitting in profit. I've got an ADR of movement here, space basically to take a break even. So if this moves an ADR against me during the New York session, I can still get out and have no loss. So I'm letting this go as a runner because I've got a decent size on it, and this could turn into an incredibly nice position. So I'm just going to leave that running for the moment. NASDAQ is holding above the opening range high. S&P is struggling to get any movement. Dow Jones is dropping. So real indecision on the markets so far. Just take a break-even stop on this. In fact, I'm not going to put a break-even on it. I'm just going to move. No point in taking any risk on it. Sorry, let me just stick a TP on this as well, actually, because that's not going to be enough, is it? 489. What do I need? More. Need more than that. That'll do. Somewhere up there. that'll get me target basically. What do I need? 880, 1120. That'll do 1140. Right. So if that goes, brilliant. If it doesn't cost me anything. It's going to stop out before it even gets to the news. So there we go. Going to stop out of that by the looks of things. NASDAQ can't break higher. We're going to get whipsaw today. It's just going to sit around and wait for that news to come out. So bit dangerous trading ahead of interest rates because obviously the market doesn't want to put any money in ahead of the news. So we'll see where we go. We've got 3 minutes until that interest rate comes out. It's unlikely we'll get a shock. You just never know, though. Yeah. So the Canadians, if you look back, we've had one instance back in June 23 where we increased the interest rate without forecast, but they are like clockwork. It is absolutely rare for them to deviate from forecast. So I'd be very surprised if we get a difference. We have got this trade war going on at the moment. There is a possibility they might want to do some slight jigging about, but I doubt it. So we'll see what the monetary policy statement says. That will obviously come through on here. That will be the market's immediate reaction. So that's where the volatility will come in straight away. And then the press conference is where we're going to get the main movement of the day. Let's see. Do I want to add to that? I might add one more on that, just in case we do break up. Right, so we'll wait and see what happens. So let's have a look at the Canadian. There's loads of ADRs to look at today as well. There's a lot of movement. So let's watch US dollar CAD. Actually, no, let's watch pound CAD because that's probably going to be the most neutral. I was going to say. Yeah, it is. We've just got a lot of money coming into the Canadian at the moment. Okay, so we'll watch the pound CAD. That will give us an idea as to what happens with the interest rate. Afternoon, Paul. Finally got out of euro pound. Took one aggressive drawdown position and left the rest with a small profit. So already a good day. Cool. Euro pound, finally. We'll have a look at that in a sec. We've got 30. Actually, let's look at that now. We've got 30 seconds. Yeah, so a very nice drop there. That was that level we looked at, the all-time high, or rather the yearly high, which we got the bounce off. So very nice. Okay, pound CAD. So this will give us an indication of whether it's bullish or bearish. If it's good news for the Canadian, we'll drop. If it's bad news for the Canadian, we'll pop. The news is in. So the result is as expected. I can tell that because if it wasn't as expected, this thing would be like an ADR above or below where we are at the moment. So forecast is in. So we're just waiting for the statement to trickle through. So what we're looking at basically is the monetary policy report, just to give us some initial indication as to whether they're bullish or bearish. There we go. Rising underlying inflation largely reflects increase in prices for goods other than energy. Absolutely no reaction whatsoever. So NASDAQ's off, S&P's off. Ah, you get stopped out. Typical. Stopped out before the rally. Too long, just removing my stop because I've got way too much risk on there now. So we're pulling back off Globex high on the NASDAQ. So this is your high of the day in Globex. Sellers stepping in on that move. Might just have another crack at a long on that. Okay, so just pulling back off those highs. So what I'm looking for is basically just pull back and pop, basically. It's either going to reject the highs in Globex and come back down again, or it's just going to pull back and then it's going to have another crack. So I've had a run up, sellers have stepped in. If there's more buying pressure than the elephant sitting in that level there, we're just going to scream straight through it. If we pop that level, we've got a very nice upside on us today, as you can see. And last sell order that came in yesterday was all the way up here. So actually, we've got one here. We kind of accumulated there and broke through. This is when Trump announced what he announced yesterday. So there is going to be upside resistance there if we can't get through this level that potentially we could hit. But if we break that, we've got a really nice run up all the way up to there. So yesterday we came down into Monday's low. We're not able to break through Monday's low. So the next logical step is to test the highs. So we know we can't trade down here at the moment. So we'll see if we can trade up at the highs. So there's a good chance we might get a rally today. The trouble is, obviously, with FOMC coming up this evening, the market's always reluctant to put a lot of investment into stocks ahead of what's going to happen with the Fed. So there is a very real danger today of a rotational day. Markets look pretty rotational to me at the moment. So long S&P, long NASDAQ, short Dow. Going to stop out on these today. It's not going to be a good day today. I think I'm going to limit my trading today. It's going to be one of those days where if you're not careful, you will just get ripped to pieces, going long, going short, going long, going short. Market's not going to go anywhere. If it's going to go into rotation ahead of FOMC, every breakout you take, you're going to get stopped out on. So the best thing to do is to sell the highs and buy the lows. If we're going to be in rotation, you want to be a mean reversion trader rather than a breakout trader. But we'll wait and see what happens. Short Dow. Yeah, it's not going to look particularly healthy. Okay, so big upside rejection at Globex high, big bearish engulfing. So I don't have much hope for that at all. Probably going to break back down again. Let's have a look at see if we've got any more interesting news coming in. Monetary policy report does not provide economic forecasts. We have stepped up our regional outreach, help understand effects of tariffs. Risk of a severe and escalating global trade conflict has diminished since April. GDP grows by 1%, 1.8 in 2027. Current tariff scenario as well as alternative scenarios. Yeah, there's nothing interesting at all in there at all. So unlikely we're going to get anything that's going to give us any idea as to which way the CAD's going. So we need to wait for the press conference, which will be 3:30. So I think we're probably going to sit sideways today. One of those days, stopped out again there. So one of those days where you're just going to get chopped to death. So I don't think I'll bother trading anymore today on that account anyway. See, not stopped out on that NASDAQ. I am stopped out on that one. How annoying. It's always the way, isn't it? You're like $500 away from passing an evaluation. So this morning on this account, I was up to 2.5K, target's 3. I'm now down to 51.3. This account up to 4.6, I think I was. Now down to 3.6. Yeah. So as soon as you get close to hitting target, it's almost like the market goes, yeah, don't fancy your strategy working anymore. I think what I'll do is I'll just stop you out now all the time. Always the way. It's what it feels like anyway, isn't it? It is just random price action. There's nothing you can do about it, but that's how it feels. Trading Hub found a money glitch. Put a EA on a demo account who made consistent losses and reversed the trades on a real account. Good luck with that. Doesn't work that way, unfortunately, because you're basically also reversing the risk-reward ratio into a negative. I thought that many times. It doesn't work. It looks like it works, and it might work for a short period of time, but there's no long-term edge in it. Market's breaking down. So Dow Jones just about to stop out on the S&P. Dow Jones is short. Stopped out S&P, flip short. Not quite flip short, actually. Nearly. I'll give this a couple of grand today. If I hit $2,000 loss, I'm going to stop because obviously yesterday did 7K, so I'm not going to risk huge amounts today. Still long on the DAX from this morning. Very, very whippy. Look, size of these wicks. Yeah. It doesn't matter what strategy you use today. If it's going to be a rotational whipsaw, what you're just going to do is get stopped out on these huge wicks constantly. It just doesn't matter where you put your stop loss, they'll wick it out and you'll be death. Death by 1,000 cuts. Thought you got a margin call on the $9 prop account? Yeah, I did. All the margin call does is shut your trades, doesn't it? So yeah. Margin calls they don't fail you on a margin call. It just trades get closed. Oh, do I want to have another go at this? What I want to do is actually get some size on, but it won't let me. Look, I've got to put my stop all the way down there to actually get a trade on. Even that's going to be like 90% margin. Look. Just no margin. Just do not give you enough margin in this account. Look. I have to keep moving my stop down to get a trade on. It's awful. Can't trade with margins like this. Can you please explain which trade is working best for you? No. Define best. The one that makes me a living and has paid my mortgage for 5 years, or the one that I'm trading in front of you here that makes big bucks over short periods of time but is unreliable long term? I don't know. The EA that works the best is the one that generates money on the day. I can't tell you what that's going to be. I use a position trader EA for position trading. I use opening range breakout strategy for scalping. They both work and have long-term edges. But I don't know what the best is because I don't know what you want out of it. Nice to know you're still in the game. Yes. It is just fun, though. Don't get me wrong. I do not do this to make money. I do this because I get bored. It's not for fun. It's not for money. It's prop. I'm still waiting to find someone that actually can make a living out of prop. I'm going along because I'm bored. And it's not real money. So S&P, we're rejecting those lows. The Dow looks like a bit of a rejection on the lows. This is the previous, I think that's the previous low from yesterday, yeah. So Dow's just rejected yesterday's low. S&P is also rejecting at Globex lows. Yeah. So I'm just looking at where the market is sitting at the moment and buying the low up on the S&P and the Dow. But I'm using the NASDAQ to take the trades, obviously. So New Zealand dollar CAD has just hit ADR as well. Pound CAD's coming down. Euro CAD will be coming down as well, which is good. So market at the moment, obviously not really moving on these numbers because obviously they're forecast. So we've got the press conference obviously coming up at 3:30. That's when we're going to find out really what the Bank of Canada is planning. But I didn't take another trade there, did I? I think I might leave this one. So NASDAQ's holding up. We've got this area here. We've been buying out of all day long so far. And it does look to me like, obviously from the S&P and the Dow's perspective, we're buying up lows as well. So it does look like the market's kind of buying the lows up, wants to kind of stay around about this area. We've got news coming out in 3 minutes, but it is just home sales, so doesn't really have any impact. But we might find we get a move off the back of this. Pushing back up a little bit now. The trouble with this account, with this margin, is you can't add. So I'm sitting on 81% margin, right? If this suddenly takes off up into here, I can't add any size. You can't move into a position. You have to just literally get one trade on, risk reward. That's it. That's the only option you've got, because you can't get any size on with it. Unless you're scaling really small to start with, obviously, which is obviously an option, but it's just really annoying that you can't add any size. This liquidity, 1 to 10, is just not enough to trade with. Crap. Guess US ideas about how to use your A? Gives us ideas about how to use your A, yeah. What eval is that? Seems to mimic real margin. Yeah, this is I can't even remember. Someone will remember what it's called. I can't remember. It's the one that does $9 evaluations. Trading something. It's another one of these new ones. Trading funds. There you go. This one. So you can do a flex challenge for $9 basically, and then when you pass, you have to pay them the full evaluation fee, which is double. So if you do a one-step evaluation with them on a 50k account, it costs you $200. If you do the flex challenge, it costs you $9, but then when you pass, you have to pay them twice as much. So it's very similar to futures, which is, defeats the object. If you're going to trade CFDs, give us CFD margin. Otherwise, we might as well just trade futures, mightn't we? It's absolutely pointless exercise, giving you a CFD account and then saying you can have 1 to 10. I can get 1 to 30 with my own broker. It's just pointless. A lot of these prop firms are pointless, though, aren't they? This is the thing, they're just pointless. Okay, so I'm $2,000 in drawdown. I'm just going to reduce the trailing stop on the DAX. This is the second part of this trade, so it's only a small position. It's just going nowhere today. It's going to stop out on the Dow. It's whipsaw. Whipsaw day today. Go and do something else. They're not going to be moving this, I don't think, until FOMC. So look for opportunities to buy lows, sell highs. But obviously, with the size of the wicks and the moves that they're putting in today, you're going to wick past these levels. It's going to be very difficult to get decent risk rewards because there's too much whipsawing going on, huge whipsaws everywhere. So, you got to either use low risk or wide stops today. It's your only real option for getting anything. It's not my type of fun. Would you recommend you use your position EA for prop? You can do. I've passed evaluations with a position trader EA. Other people have passed evaluations with a position trader EA. The trouble is position trading is long term. So you will get into drawdown with the position trader EA. So as long as you accept that, hitting a 5% drawdown is likely with position trading. I don't think I've ever had a month ever where I haven't hit 5% drawdown, because that's the whole advantage of position trading is we take drawdown, not loss. So if you start an evaluation when the market is in range and stays in range like that, yeah, and you're using fairly high risk, you'll pass very easily. You know, if you get into 1 or 2, maybe 3 trades per position, yeah, it will work. But you get any slight squeeze on and you will immediately go over the 5% limits. So it's not great. I have never found a strategy that works on prop long term. Yeah, and no one has. No one can show me a strategy that works long term on prop either, because their restrictions on evaluations and early stage funded accounts makes you trade a strategy that has a risk reward sort of ratio that is always going to fail. This is the whole thing. You know, it's like people will pass evaluations. I've passed loads of evaluations, and you get funded accounts. I've been paid out of funded accounts. But the strategies that I use to pass evaluations work long term. They're long term edges. So I can trade this ORB strategy, yeah, which has a lovely long term edge, makes beautiful profit, but it's going to have losing days and losing weeks and losing months. It has very few losing months, very few. But losing weeks, it does have. I haven't had one for last month, but it does have losing months, losing weeks. Every single losing week is an account blow. So unless you get 3 weeks really in a row where you have profit, you will probably blow your account. Yeah, and that is true of every single trading strategy under the sun. No one's ever been able to show me a trading strategy that can go for 3 or 4 months without losing a week. So therefore you blow your account. And they know this. They're not stupid. They are traders that set up these firms. They know what trading is. They know how to trade. They know that everyone's going to try and milk it. So you're better off using high risk strategies like this with ORB. Oh, I didn't stop out on the DOW. That's nice. You're better off using high risk strategies like this and just timing it right. That's what it's all about. So, you know, if I started my evaluation yesterday, job done. If I started my evaluation Thursday last week, fail. Yeah, the strategy is sound, nothing wrong with it. But that is the difference between passing and failing an evaluation the day you start it. Because either the strategy matches the market or it doesn't. If it doesn't match the market, it will lose money. If it matches the market, it will make money. You don't determine whether the market is matching your strategy or not. The market does. So you have to sit there, execute the strategy and hope that you get a positive profit curve. Nothing to do with it. But they know this. These prop firms are very clever. It's really tempting me in. I'm just reducing my risk down on the S&P. Oh, no, I'm not. Sorry, I'm not in the S&P. That didn't trigger. I thought that triggered short, but it hasn't. So obviously we are whipsawing. If it is going to break out, I'm long there and I'm short there. So one of those is going to fail. So I'm just reducing the risk down on this. If I stop out on that, I just want to keep this tight today and try and get out with a couple of grand of loss. So I don't have that much hope for today at all, really. But I was just looking at this. We are bottoming out here on the NASDAQ. So we are still holding this level, but look at the size of this. So you want to stop down here somewhere, ideally down there, perfectly down there, don't you? So look at the size of the stop really you need today to consider to actually take this long and actually survive this whipsaw. It's going, isn't it? Can't add to that. I'm going to have one more crack on the NASDAQ with small risk. And I'll look to target Globex high. Sorry, yesterday's high. Actually, no, it's probably a bit far away, isn't it? It's either going to go or it's not, isn't it? I'll have one more crack at that and see if we can get out the longs. So we'll stop out on the Dow. Right, FX wise. So RSIs, as you can see, we've got a lot of RSI extensions on at the moment. We've also got a lot of ADRs. Aussie dollar CAD. So the Canadian dollar, obviously, today is the flavour of the day. Aussie dollar CAD, big, strong move down into 150 ADR. Don't forget the Australians are bearish at the moment. We had all that negative news for the Australian dollar yesterday. They didn't change their interest rates when they said they were going to. This number that we had for CPI yesterday now forces them to change their interest rates. So they did the 3.85 instead of the 3.6. Market was selling into that, ready for them to do it. They didn't, so we got that little bit of a pop. We've now had inflation figures coming out, which is under target. So don't forget, 2% is target for inflation. When you reach that target, you have to drop your interest rates. Otherwise, you run the risk of running into negative inflation. So that will definitely be coming down to 3.6 next time round, assuming these figures stay as they are. So Aussie dollar, very weak. No reason why we should be buying the Australian dollar at the moment. Obviously, they've been piling into the Canadian dollar today. So this is the perfect storm, which is why we've got 150% of ADR. So just be careful trying to mean revert this, because you are running against a steam train at the minute. The Canadians could come out with the press conference in half an hour and be massively bullish about the CAD and say that we're not dropping interest rates. We can't because of the trade wars, etc., etc. And we get a big, strong Canadian dollar push. So just be careful of these Aussie ones, which are getting extended. Aussie US, same thing. We have just come down into weekly lows from last week. So could well get a bounce out of that, but it's FOMC day. So high probability of a strong dollar later. So just be aware. If we do get a weak dollar later, that is the expected move. But obviously, because that's bearish, you've got a bear against a bear, the likelihood is it will just sit around and do nothing. So again, not a great ADR reversal today on that one either. CAD Swiss, big, strong push to the upside. Weak Swiss franc today. Not that weak, but it is weak. So yeah, weak Swiss franc. So CAD Swiss obviously being strong, piling into the CAD with the interest rates. So again, that one potentially might be decent. We've got a weak euro at the moment, which will weaken the Swiss franc. Sorry, so that goes that way. So no, that's not a good mean reversion. So yeah, there is a possibility of a pullback on this, but I'd watch that propulsion gap for rebuys. So not great either. Euro CAD, obviously I'm short at the moment. I've just got out some of that. There's a high probability of that continuing as well. Same as the euro US dollar. We've got a strong US dollar. FOMC later. Could do that. Could do that. I mean, if you take any trade today and you're looking at anything short or medium term movement wise, you're crazy, because obviously this thing, it's a 50-50 chance of going parabolic in one direction or the other this evening. Highly unlikely it will. We're not forecasting an interest rate change. And it's rare, as again, you can see, we've had 2 instances in the last 3 years where they've deviated from forecast. But we have got Trump on the Fed's back. Powell is not cracking, but you just don't know. I've been watching the news to see if Trump was saying anything about interest rate drops, and he hasn't mentioned anything. So, US copper stockpiles at a 21-year high. Yeah, there is a possibility of some movement there. So I would be a little cautious about trying to get into US dollar today. Pound odd, big strong move to the upside. That's already mean reverting. Your 5-minute reversal alert's already triggered on that one. There's your M pattern reversal, head and shoulders as well. Pound CAD, again, be careful trying to mean revert this. You're not going to get a reversal alert on this until you get there. So it's going to take sort of almost half an ADR to get actually alerted to structure shifting on that. So it's probably, again, not a great one. Pound Swiss, that was a nice reversal alert straight off of ADR today. But again, euro is weak. So with the Swiss franc, if that's going to weaken, that's the move we're going to get. So again, this one I can see potentially starting to reverse now. We've got this reverse alert down here. We pushed up into those highs, pulled back, push. So market structure looks like it's shifting back to the upside. You are probably going to get that weekly bounce, and this is probably what we're seeing here. But I get the feeling that's going to get popped, and we're going to be heading back up to that 3-week high. We've also got pound US dollar, again, taking trades against the dollar before FOMC. I'm already long on this, so I haven't really got a lot of choice. But if you look at where we're potentially heading, there's a long way to go back down to that monthly. So we're kind of sitting in these propulsion gaps here now because we broke out of that double bottom, which was the monthly lows. So the logical place to go is down here. But obviously, Trump and FOMC, we could be back up there this afternoon. I mean, we won't be back up there. But, you know, you could easily get a 200 ADR move off of FOMC. So there's potential for that. New Zealand dollar CAD. So I'm long on that one because of the RSI extension, basically. But it's just continued down. So, again, nice divergence forming there for bulls. New Zealand dollar CAD, that got extended to Canadian dollar move to the downside, and US dollar Swiss to the upside. So, and US dollar yen as well, but yens I'm really not interested in. US dollar Swiss, basically, that's a weak euro, weak Swiss moving up. I'll be watching for sells out propulsion back down into here. That'd be a nice little move. And then, depending on what FOMC says this evening, we may be moving into a strong dollar. We'll have to wait and see. RSIs, you've got 2 RSI extensions beyond 80-20. So these are kind of the better ones. You've got 3 hourlies as well. But the 4 hours, euro US dollar, again, dangerous taking one today. We are very nicely extended down here. Beautiful divergence going in at the moment. You've got this low out of propulsion here. So that high there got broken and they added size. So this is potentially a good bounce point. But again, FOMC, you know, we'll blow straight through that if it's a strong dollar on FOMC. If it's a weak dollar off FOMC, we'll be back up here. So, yeah, just be careful. It's a lovely RSI extension. So if you look at the size and speed of this movement, how far we've gone so far in literally half a week, you're going to look at some kind of pullback. So if this is a strong dollar move, you're going to be pushing down into propulsion, and then we'll be looking for a bounce out. By the time we get down here, you're going to be massively, massively extended, you know, this sort of extension. The market can't sustain it. It won't be able to push further if it gets down there, and then we will just pop straight back out of it. So it's going to have to take something pretty hefty for it to drive too much further beyond this area here, which is 225 ADR. So if you're screaming from there all the way down to there, 225 ADR, if you look at the weekly levels on euro US dollar, which is here, we're already at 175% of our average weekly range. We're on a Wednesday. So if this pushes up into the 200, 225 AWR ranges, you know, the market's just not going to sustain that level of movement. So it will ping back quite quickly. How far? Difficult to tell. And you've also got the US dollar CAD. And again, US dollar having a lovely little rally. We're up above the 80 level. Again, this is the area we tend to struggle at. Yeah, 80-20. You find it very difficult not to bounce at 80-20s. Yeah, market really, really struggles to get beyond there. So if you're moving, especially like this week, we've moved from an RSI extension to an RSI extension within a week. This is last Wednesday. This is today. It's exhausted. So we have got news today. Obviously, Canadian press conference is coming out in 15 minutes. Then we've got FOMC this evening. So it has the potential to really, really extend. And if it gets all the way up to 200, 225 ADR today, and you start a position short, you're definitely going to hit resistance there, which is going to pile this straight back down again. So these are quite nice extensions, but just be prepared if there is a fundamental shift. For example, if Powell comes out and changes the interest rates, it's not coming back. So they're risky moves, but we'll see. You never know. We are stuck, aren't we? So stopped out the Dow. No trade S&P. Still long on the NASDAQ, but not going anywhere. So again, just whipsaws. Although we are bullish, European indices coming back down again. So I'm out of the DAX. I'm just going to cancel this. So one thing to bear in mind today, if you're using ORB or SIH, you may well have pending orders sitting in the market. Obviously, the EA automatically cancels your pending orders off at end of session. For me, end of session is 10:30, which is 8:30 UK time. FOMC 7 o'clock. So you just need to bear in mind that the press conference is 7:30, but FOMC 7, press conference 7:30. Market will move somewhere around about 8 to 8:15 when the press conference is coming to an end. So just bear in mind, if you've got a short order left in place from this morning's action on the DAX or the FTSE, if the markets go mad on FOMC, you're going to trigger on those orders. So just bear that in mind. I always cancel them off so I'm flat, because what you don't want is a whipsaw on FOMC, and all you're just going to do is hemorrhage that order. You may even get filled. So if the pending order's sitting here, if it's a big FOMC spike, you might not get filled until down there, which means that the stop loss there is going to be 100% bigger than you were anticipating. So if you want to get filled there and the market fills you there, and then you get stopped out on a whipsaw, that's going to be way more than your whatever risk you're taking. So just bear that in mind. Be careful. Brokers, as much as we love them, they will be after your cash. Long on the S&P. Just about to flip long on the Dow by the looks of things as well. So market is breaking back to the upside. I want to add. So this is either now going to go, and we are going to run up and retest the Globex highs, or it's not. So I'll add if we are. If we're not, that'd be me done. Can't trust this today. So press conference coming out in 10 minutes. We won't get any movement off of that really until 4 o'clock. So I'm going to stay whippy until then. Anybody got any other pairs or anything they want to look at? Let me know. Mumble, depending on the strong US data and Trump forcing poor Powell to lower rates, if there is a lower interest rate today, that should weaken the dollar. Yeah. The market is, I mean, the market's rallying today, and it has been rallying for the last couple of days on the dollar. That would indicate that the market is thinking probably that the interest rate drop's going to come in September. The reason this rally is going on at the moment on the dollar is partly because of the trade deals that have just gone in with Europe. That's massively good for the dollar. It's going to generate lots of revenue for the dollar. And he's just pumped the dollar on oil. Yeah, so he's just threatened to put more sanctions on Russian oil, which is going to make US oil more expensive. That's also rallied it. So this move that we're seeing here isn't really the market buying into interest rates. It's more to do with the trade deals and the threatening sanctions that have gone in this week. So if that interest rate today stays at 4.75, which is 4.5 as it's forecast to do, we will be waiting to hear what Powell says about forward guidance. It's highly likely that he will say we will be dropping rates in September. Now that is already a known. So The only way we will get a bearish dollar this afternoon or this evening is if Powell comes out and says there is an argument for moving interest rates down next month in August. So if he says and backs up the September, that's 2 months away. Yeah, the market will start to sell into that, but probably not straight away. So you'll find that it will move on current news, and current news for the dollar is mixed. So we've had some decent moves, decent news on the GDP, all good. Employment seems to be going okay. Not going to change interest rates until September. That's what we thought. So we're coming off the back of bullish news. So it's unlikely the dollar will drop. If that comes out at 4.25 and Powell pulls a fast one, kiss it goodbye. It'll be gone. We'll be down here. We'll be back down here. 300 ADR. So, you know, this is the thing. You're never going to be able to tell until it happens. But if that interest rate does come out lower, you want to look for any reason to get short. Try and build a position short. Because it will keep coming down. Powell won't be able to talk that up. Yeah. So if that comes out at 4.25, there's nothing he can say in that press conference to make the market better. They have been assuming and positioning themselves on the dollar, assuming no change on interest rates for a quarter. If they change their mind on that without telling anybody, they will reposition all their dollar exposure and it won't be good. So the stock market will pop, because what they will do is they'll pull their money out the dollar and they'll stick it in stocks, because we've had some good earnings this week. So you'll find that the stock indices will rally. Oh, we're already gone there. I'm back up to break even. We're prepared to move on the Russian sanctions bill if required. Yeah, we know that. We are getting a break. Just closing my S&P and flattening that short. I don't want to take any more risk on the S&P today. Just reducing that loss. I can't believe this is going to go today. I really can't. So we are testing Globex highs again. It's clear air basically back up into this propulsion gap. So even if we do get out, we're going to be hitting sellers there. My partial's miles away. So I'm just going to take that one off because it's profit. I'll leave the Dow to run. Again, it's the same situation with the Dow. That is a potential second rejection of the Globex highs. Look. Again, sell the highs. If you're going to stay in rotation for the day, you sell the highs and you buy the lows. If it isn't going to be that, we are going to break out, we are going to get a move, then once it pops that high, we'll be off and it'll be happy days. But on an FOMC day, if you go back and look at previous FOMC days, the market is very reluctant to drive any money into stocks because you don't know what the interest rate is going to be on the dollar. So if that interest rate comes down for any reason, or there is a forecast for that interest rate to come down within the next month, the dollar will drop. If the dollar drops, you can buy your stocks cheaper. So you don't buy stocks on FOMC day ahead of the interest rate decision, because if you buy them tomorrow, you buy them at a cheaper price. Yeah. If they are expecting the interest rates to go up, then you will see a rally on FOMC day, because they will be wanting to buy their stocks before the dollar strengthens. So it's always the indecision on FOMC day that is what the norm is. The norm is we know what the result's going to be. So the norm is to sit in rotation for the day, which is why you get these choppy, crappy days. Can't do anything about it. Robert, do you ever use those coding competitions like Code Chef to practice your coding? Never heard of it. No. What's that? Board of theory? Let's code for real. Well, I do code for real. No. There's a very little point in doing any of this. The entire coding community is redundant. If you remember, you're in the member stream this morning. You know why. It's just if you want to have a job in the future, plumber, mechanic, builder, anything that doesn't use a computer, because you're redundant. Learning to code, right? My son is at college at the moment doing computer science. Yeah. Gets a coding project, brings it home, asks AI to do it for him, and then gets on with something else. Yeah. What is the point in learning to code? Yeah. There is a super intelligence everywhere that can do it for me in 2 seconds. Pointless. Yeah. Those sorts of websites are fine now, but give it 6 months. Yeah. The rate that the AI releases are coming out now, like the new agentic AI that we've got now with ChatGPT, I can not only ask it to code for me, I can ask it to come up with an idea, document it in my Google Docs for me, put together a plan for me, go to Figma, design a website for me, and then go to somewhere like Lovable and code it for me. In fact, I wouldn't even go to Lovable to code it for me. I just get the AI to do it for me. It does all of this for me without any interaction whatsoever. So practicing coding, what's the point in coding? You're practicing an obsolete occupation. It just doesn't exist anymore. Bill Gates has said it as well. Everybody said it. Everybody with half a brain knows that that you are going to have jobs in coding, but do you know what those jobs are going to be? Checking it works. You're going to be more of a bug fixer than a coder. The jobs in coding are going to be coding AI prompts. Yeah, that's where the money is, in prompting AI. Yeah, if you're clever enough to write prompts for AI that you can build applications to use AI to do other things for people that haven't got the brains to do the prompting in the first place, that's where the cash is going to be. I lost it when Powell smacked dump during the renovation walkthrough. I haven't seen that. Wouldn't surprise me. Right. Let's have a look at where we're going. Okay, so Dow's propulsion holding. So is NAS. So we've got to break these Globex highs, basically. S&P looks to me like it wants to go. That was an immediate rejection, though, after it attempted it. So we've broken out, immediately rejecting. So we need a bull close above that high, really, to confirm that we are going long today. NASDAQ looks like it's going to try as well as the Dow. Did I add another contract onto this? I did. Okay. Okay, so we've got a propulsion gap here on the hourly chart. So that's yesterday's sell-off. So this is obviously the open yesterday. That's where we broke through that previous move. So this propulsion gap to the upside is likely to be your upside resistance today. So it makes sense to stick target in that propulsion gap, which is $2,000, which still won't get me target, but meh. I'm just going to reduce risk. I'm still not convinced we're going to break these highs, but happy days. Virginia reminds me, in newspapers, the hot metal type settlers were made redundant overnight in Fleet Street due to tough kloopy discs. What's a tough kloopy disc? and computers. Floppy disks. Yeah, floppy disks. This is the biggest leap in mankind since the Industrial Revolution. AI. It is literally making thousands of people redundant in hours every day. The workforce in IT. Microsoft made 9,000 redundancies. All these companies are making thousands and thousands of redundancies. Overseas, call centers, chatbots. Yeah, there's absolutely no reason for salespeople. Yeah, if I land on a website and there's a chatbot there, that chatbot is basically told with a prompt to discuss the context of the conversation that they are asked, analyze the entire website, every page on the website, summarize it all into a database. And then every time you're asked a question about anything to do with the website or the FAQ on the website or any content stored anywhere near the website that's related to the website, give them the answer. Why do you need a salesperson? AI can sell way better than a salesperson can because it's going to give factual information immediately and sell the features, advantages, and benefits. Redundant salespeople. Call center staff. Yeah. AI can talk. Yeah. You phone up someone and you ask them a question. AI will speak the answer back to you. And when you answer back, it will use the context of the previous answer it gave you and your previous question to build a conversation. Call center staff. Redundant. I can go on. Yeah. Anything to do with email responses. It can reply to emails. It can draft emails. It can do chat. It does everything. If there is a computer involved in your job, you are redundant. We are in such early stages. By the time we get to next year, there will be super intelligence everywhere. And there won't be any reason for a job in IT or supporting IT because it's all done for you. No, absolutely pointless. There are certain industries, I think, like web hosting and things like that, where you're going to have to mechanically maintain systems, that sort of thing. But, keeping systems up to date, software updates and all that sort of stuff, call center, server hosting staff, dead, gone. Yeah. Physically, if you need a spanner or a tool in your hand, you're going to be in a job. That's it. If it hasn't got a tool, you're dead. Nice outlook, isn't it? So by creating AI and superintelligence, what we're doing is making the human race pointless. So either you go out and earn your own money, because there's no point working for anybody else unless you're on a building site. And obviously now houses can be printed using computers. So what you've got to do is fill up the concrete hopper on the printing of the house. That's the next stage, isn't it? So builders, what's the point in that? Happy days. Trump handed him the renovation costs live in front of cameras. Oh, Powell looked at it and said, this is for the building finished 5 years ago. Priceless. He's not helping himself, is he, Powell? Trump's not happy with him as it is. Probably not the best thing to do to upset him, but anyway. Do you think your job is vulnerable to AI revolution? My job? What, trading? Don't know. That remains to be seen. I use AI on a daily basis. I went through with the members this morning a new website that does AI analysis of fundamental data. I use that website every day. It's doing a lot of the work I used to do, but what it's doing for me personally is speeding up my day. If I could use it to trade, fine, but I don't know. The intricacies of making decisions like I did there, cancelling that pending order off there, moving that stop loss down there because I saw rejection. Can it do that? Possibly. I don't know. But that decision to reduce that risk and take slightly less loss on that and to close that out because I have already got risk here and didn't want to expose myself too much in case we go into rotation, is a decision-making process made by me based on 20 years experience watching these candlesticks go up and down. I don't think you can teach it to do that. It can do its own thing with charts, with price patterns, with everything. I can teach it to identify patterns, and I've done that. I've used it to try to identify repeating patterns over days. It couldn't. So I don't know. Is it going to make trading redundant? I don't know. Coding it is, yeah. So I used to be a coder. I still am a coder, but I'm still coding stuff. I'm coding in EA for somebody at the moment, which is over here testing, doing brilliant stuff, making money. It's lovely. Slightly down today, but only one little push out the top here and we'll be fine. But I'm still programming for people because I think we're at a point at the moment where people haven't quite realized how much they can do with AI. That's where we are. I think we're at a point where we haven't quite woken up yet to the possibilities of it. Yeah, you give me any system or strategy on the planet, I'll have it ready for you in 15 minutes. Fully coded, EA, backtestable, working. Yeah, you can do that too. I taught everybody this morning how to do it with a website that I've actually been creating. Yeah, it's so easy to do, but people haven't really figured that bit out yet. You go and ask AI how to make money online. It won't just tell you how to make money online. It will ask you what niche you want to work in. Where have you worked? You give it your CV and it will go, looking at your experience, you know a lot about this industry. Websites and businesses you could start up online today in that industry are X, Y, and Z. Here are the competitors. Here is what they charge. Here is how many visitors their websites get. This is their business model. Here are all the customers' pain points that you need to solve with a product. Here are some product ideas that would solve those pain points. These are the competitive gaps in the market at the moment that you could utilize. Would you like me to build your website for that? Okay, go. You can do all of that right now. Yeah. You can have a business up and running online, taking payments within 24 hours and have absolutely no clue how to code, run a business or do anything. It will tell you the lot. It's phenomenal. And we are so early on in what this thing's going to be capable of doing. So yeah, simple things like coding. Christ, I've been doing that for years, AIs. Right now, though, you've got websites like Lovable and Base44, lots of other website builders out there now where you can build full applications within a day, which you could launch online and sell. It's unbelievable. Yeah, you don't need to code. You don't even need to understand coding. You don't need to understand anything. It will tell you how to do it all. It tells you how to host it. It tells you how to set up a domain name. It tells you what email systems to use and how to integrate them, how to set up DMARC records and everything. And it will do all the coding for you. You just tell it, oh, I just tried that. It doesn't work. And it will go, here you go. Now it does. Oh, yeah, thanks. Brilliant. But the people making money are the people that build those. They build the tools to help the individuals that aren't clever enough to use AI. They simplify it. And that's where the money is, in simplifying AI workflow. That's where it's going to be for the next 6 months to 12 months until AI can do that for you without you having to go through a third party. That's Jarvis, isn't it? That's the dream. That's the Avengers. That's Iron Man. Yeah, Jarvis. Analyze this and make me a new molecule. No problem. They've just done it. Scientists just made a new molecule, haven't they? They've made all sorts of things. They've made a new liquid metal that you can't drill through with a diamond drill bit. AI developed it, came up with it, because they said, I need something harder than steel that's in liquid form we can take under the sea. And it went, well, this is all the molecules we know about. Have you ever thought of combining them all together? No? Okay, off you go. It went away for a couple of weeks, combined every molecule on the planet together and came up with a compound that's harder than steel. Would have taken the human race years of testing, blowing things up, killing themselves to actually figure that out. A couple of weeks. And on one hand, programs can be fairly predictable. Yeah, and this is the problem with trading and why I think the trading space is one of those areas that is going to struggle with AI usage, because what I've learned about AI We're just rejecting on the NASDAQ, on the Dow. Holding up on the NAS. It's not looking particularly strong though, is it today? The trouble with something like trading, which is a binary market, if you have two AI models pitted against each other, and this happened in New York years ago, we had obviously when the quants started taking over in central banks and institutions, we had a period of time where the market was being run virtually by EAs, if you like, quants, but they had no safeguards on them. And the stock market crashed so fast, before they spotted it, they couldn't do anything about it. The problem is if you get an AI to take that side of a trade against an AI taking that side of the trade, the AI has to come out on top. So you're pitting a 50-50 probability with something that is programmed to use an edge. That edge can't work if that edge works. Therefore, both edges cancel each other out. The difference here with me making that decision and me making that decision is human. So you either have to train the AIs to be human, and this is where the big gray area is, isn't it? Or you have to have some kind of system in place that means that there's a limitation on what they're able to do so that we can have free-flowing markets. Because you have to have someone taking the opposite side of an order for an order to happen. Yeah, if I'm selling apples here and you want to buy apples, we've got a market. If I'm selling oranges and you want to buy apples, there is no market. There is no order. Yeah. So this one has to go and find the guy selling the oranges or the apples, whatever. That's the way markets work. I don't think AI can do that against another AI at the moment. Quants can, because quants are programmed to execute orders in a specific way by humans. So we have done the back testing, we have found the edge, and we are using automation to execute an edge. AI would come up with its own edges. I just don't see how that would work. We're rejecting the NASDAQ. I'm just going to protect that with a break even because I think I'm going to stop out on the Dow. Struggling again. Globex high is holding. Look, we're hitting an iceberg order here. Can't get through. I'm just going to move up there just to take some profit. If this is rejecting these highs, we're going to come crashing back down again. So I'm just going to make sure I bank 500 on that. I need to protect this as well. So I'm 800 down. So that gets rid of half my loss. So it'd just be a small down day rather than a big down day. It'll either pop or it won't. At the moment, it's not. So for 20 minutes now, or 30 minutes, we've been banging our head against the brick wall up here. Buyers can't get through. Either the sellers are going to run out of orders, and we will, or the sellers are just going to keep adding into this iceberg order here, and we're just going to pop straight back down again. There's only so many times you can hit a door without breaking a bone. We've hit it 4 times, we haven't got through. If we hit it a 5th time, we will go. But struggling, aren't we? So this propulsion move here, obviously, is where we would expect them to add to the Dow. If they don't, we're probably just going to rotate. So that's the move of the day, basically. Is like I said, you sell the highs, you buy the lows, you sit here and you wait. If there is a reason for them to drive today, they will do. But I mean, at the moment, it just looks like it's struggling. Delta is pretty much flat on the NAS. I haven't got Delta on here. Another reason I don't like this prop firm, their software's crap. Hasn't got cumulative delta on it either. Hasn't got any delta. Really? Wow. Top Step haven't got it either. Is that a custom? It must be a custom indicator. I never use cumulative delta because you can see it. It's really good. It's a really good indicator for understanding who's in control of the market. But you can see who's in control of the market here. No one. So it gives you a little bit of an edge. You get an understanding a little bit earlier than price action, I think. But the trouble with scalping, I have always found, is every indicator is giving you a signal, which is a 50-50 probability. When you're using time frames like 5-minute and 1-minute charts, you are going to get signals constantly. Always. You're just going to constantly get signals. So every indicator you use on low time frames is pointless because it's all about price action. If it's going bullish, go bullish. If it's going bearish, go bearish. If it's up, down, up, down, up, down, sit there and wait for it to side. Indicators will suddenly go, we're bullish, we're bearish, we're bullish, we're bearish, we're bullish, we're bearish. And you end up just hemorrhaging cash, which is why I just don't use indicators on low time frames. I never have done because you just VWAP is probably the best indicator out there. But that all it does is tell you if you should be bullish or bearish. And when you get back to VWAP, it will either bounce or it won't. It's still got a 50-50 probability of whether VWAP holds up. Okay, so just trying again. Can't break it, can we? We have got 10 minutes left before the hour's up. Market cannot get out of that high. We've got the press conference in 10 minutes. So we are going to start to see... Oh, sorry, 3:30. No, we're not. Press conference is underway, isn't it? So the end of the press conference is coming up. So we will start to get some movement when we've got some directional bias. It doesn't look like there's an awful lot being said, does there? Need to set policy considering tariff risks. It's hard to be as forward-looking as usual. Again, it's all neutral. We can't make any decisions because we don't know whether we're going to have tariffs like that or tariffs like that because we haven't decided yet. Yeah, just nothing. Nothing coming out that's bullish or bearish at all about the CAD at the moment. Slightly bearish on the CAD because we're getting no information. There you go. So there's your fifth rejection at those highs. But we are still bullish, look. It's a wedge. Here we go. We might get a run here. Oh, new high of the day. Can we hold it? Yes, we're out. Okay, so broken along. Happy days. See if we can hold it. You watch the size of this wick. Probably likely, isn't it? So we didn't realise caps was on. It's only an S, Brian. You just put a capital S on the end of NAS. You can be forgiven for that one. Unless you typed something else and you've deleted it, which was in capitals. I didn't see that. I just want to get out of this. I really just want to be flat. I don't trust this market at all today. Just going to close that short on the NASDAQ just to make sure that I don't get triggered into a short on the NAS later today. There's my partial on the NAS. So we're in propulsion. So this area here obviously was the big sell from yesterday. This was kind of Trump. So, but we are breaking that accumulation. So this accumulation break to the downside, we hit it. It's got stuck. Finally sold through it. So this is where the sellers are sitting. Sellers hit lows previous, bought back up again. So this is your battleground short. This is your battleground long at the moment. So we're either going there or coming back down here. See how we hold up here. We could be stuck here for an hour at the moment. There's just not enough volume today, as I say. Oh, I can look at volume on this one. Mind you, it's only CFD volume, so this would be interesting. Seeing the difference between CFD volume and futures volume. Yeah, look at the difference there. Look. So this is why CFDs, you can't use volume. CFD volume, look at how large that is, but look at how flat that is, yeah? So this is a CFD market, contract for difference. This is a proper futures market, yeah? Look at the difference in the volume, yeah? Huge volume spike, small one, big one, yeah? And then we got a bit of a push up there, lower volume, higher volume, real drop in volume over the last 15 minutes. But if you look at the CFD volume over the last 15 minutes, almost identical, yeah? So this is why you cannot use volume in CFDs, because this is broker volume. This is whoever the broker is, it doesn't even tell you. This is a prop firm, so it's probably using a centralized broker from somewhere, but probably 8cap or something like that. But this isn't real. So if you're using volume in your trading in CFDs, like Forex or CFDs, indices, anything like that, this is utterly useless to you, because what you're seeing is the number of orders executed through a broker. If that broker's only got 10 clients, you're seeing the grand total of 10 traders volume. Useless. Yeah. Whereas here, you're seeing the CFD, the futures volume going through the entire futures market on the planet. Real. Yeah. This is real volume. We have got many more buyers here than we had on that last bull candle. Yeah. But we've not got as many as we saw here. And that was a rejection. Yeah, so it's proper volume, usable volume. Just going to move that up. S&P still stalled out. Look at that. That's not going to hold. Can't believe that's going to hold up there. Got all this accumulation we're going to hit as well from yesterday before that sell-off and add. That's the propulsion gap there. Can't believe this can possibly break higher today. I might be wrong. I probably will be wrong. I'd love to be wrong, because this will get the evaluation over the line. And I'll get funded. In fact, I'll get funded on 2 accounts if this breaks long today. So it'd be lovely if it does, but I'm 800 away. I'm just going to move that up there. Only reason is that it gets rid of that loss. Turns it profitable for the day, but it's either going to go or it's not. Do you think AI will be able to identify patterns in trading that humans can't? You've always said that trading patterns don't repeat. Yeah, so patterns do repeat, but they do not repeat in the same way. So if you look at a head and shoulders, where did I see that head and shoulders? It was on an ADR. It was on an ADR that's actually moved. Pound US dollar, was it? Wasn't pound US dollar. But yeah, I mean, patterns do repeat. But they never repeat in the same way. So what AI will do, and it's probably very good at, is identifying variations of patterns. There was a lovely head and shoulders I saw. I'm sure it was on a 5-minute time frame that we were looking at for a reversal earlier. It's literally just, there it is. So you pound odd. Yeah. So this is a head and shoulders pattern. Yeah. For this to work, we have to break that neckline. Yeah. 80% of head and shoulders patterns fail. it will be able to identify those head and shoulders. But there is no two head and shoulders patterns on the planet you will find that look the same. Go and find me a head and shoulders that pushed exactly that distance, pulled back exactly that distance in exactly that way over that 5-minute period, followed by that move there, which was exactly that distance with that many green candles, with each of those candles being that size, followed by that reversal, which came as that speed, and then had that right shoulder on it, which had a secondary shoulder on it, which didn't quite break that low and held up and then suddenly. You won't find that. You will not find that. I've built GPT models to do this. I've given it a day in the DAX, and I said, go back and look at every single day in the DAX and find me a repeating pattern that it consists of X number of candlesticks. It doesn't exist, because there is never 2 days that have the same price action on every single 5-minute candlestick. Therefore, there is no 2 days that have repeating patterns. There are days where you have a down candle followed by X number of up candles, followed by a reversal alert, followed by a 50% retracement drop. Those things happen, but the size of each of the moves is never the same. So it can find repeating patterns in the same way as I can identify a head and shoulders. But does that help you make a 50-50 decision? No. So it will find a pattern and then it will say, here's a head and shoulders. I can build you an indicator that can do that. I've got indicators that do that. But it doesn't help you determine whether or not it's going to go up or down, because that's out of your control. So it can help us by making our life easier. You know, these indicators that I built, the ADR dashboard, the RSI dashboard, they're here to make my life easy so that I do not have to every hour come over here and drag that over there and see if that's extended. I don't have to. There you go. That one's extended. It's a long opportunity. I don't need to do this anymore. I used to do this every hour of every day. Now I built that and I sit here and wait for this to go ping and tell me to go and look at a chart. AI can do that as well, but it doesn't help you make a trading decision, does it? It can give me statistics on how many head and shoulders of a similar pattern have worked in the past. I can build an EA to get that data. Yeah, so it can't do anything more than I can do. And I can do it better because I can confirm the information that I am seeing. Whereas if I tell it to go off and say, find me head and shoulders patterns within a 15 to 20% variance every day for the last 10 years on an hourly chart on all FX pairs, come back and give me the statistics on how many of them held up and how many of them worked, or, you know, how many failed and how many worked. It can come back with a statistical analysis saying 65% of them worked. Does that help me make a trading decision? No. In that respect, it's useless. It can identify patterns, but I can identify patterns. All patterns are a price over time representation that we see happening over and over again. The reverse alert indicator is there to show you when the structure is broken and retested and market structure has shifted direction. It can do that. What do you do with that information? That's where the difference comes in. We can backtest all this. This is a great example of Aussie US. It can identify we have hit a weekly low and price action has gone through the weekly low by a percentage of ADR and pulled back inside that level. How many times does that happen? I can send it off to get that information. It happened there as well, but it failed. And then it made a head and shoulders, which worked. But that is 20% of head and shoulders. 80% of them will have done that because it's market structure continuation. Doesn't help you. But yeah, it's going to be really good for stuff like that. And it is really good for stuff like that. But it's whether or not it's a way of making profit. I'm stopped out. So basically, just the day is now not a loss, which is fine. Still in this one. So yeah, I don't know. I honestly don't know what the use for it is. Speeding up your life, AI is going to be great for that. But in trading, I just don't see how it's going to help much. But I don't know. I've got a theory that patterns do work, but you need multiple small patterns with context for them to actually work. Yeah, 100% agree. Do you know what that's called? Discretion. What have you got as a human that an AI has not got? Discretion. What makes you have a theory? Discretion. Stopped out on the Dow. Oh, I'm not stopped out on the Dow. Nearly stopped out on the Dow. Yeah, that's the difference, isn't it? Patterns do repeat. Don't get me wrong. Patterns repeat themselves all the time. Yeah, bearish engulfing is a pattern. An outside bar is a pattern. An inside bar is a pattern. A double tweezer top is a pattern. They repeat themselves all the time. This is why we have them. Triple top, pattern. It will repeat itself over and over again. But does it mean that the price is going to come down? No, it means that the pattern has formed an area where we couldn't find any more sellers available for the buyers in the market, so the buyers had to retreat. What happens next? It comes back down. What happens after that? No idea. The pattern is identifiable. The pattern will repeat itself. The decision-making process on what to do with that information is a binary outcome. That's trading. How does AI help you with it? It helps you identify patterns. But like I said, I can build you stuff, and I have built lots of stuff that helps us do that. I've got candlestick pattern recognition dashboards I've built. Scrapped them because they're useless. It tells me that you've had a hammer. Brilliant. What's the odds of a hammer working? 50%. Doesn't help me. Trading doesn't help you. I do no more trades this week. Happy that I could manage to exit the Swiss yen yesterday with a very small loss. Cool. Oil breaking out to new highs. Excellent. That's what I like to hear. It's trying. We're at yesterday's high, which we've rejected twice. So yeah, if we pop that high, next stop on oil, I think, is quite a distance. Yeah, so this propulsion gap that we're retesting here, yeah, we're getting held on this propulsion gap. This move here, this whole leg down, is the opposite of that leg. So this is a panic buy on oil due to conflict. This is a retracement of the order due to conflict stopping. So what we are actually doing is continuing price action of oil, which is bullish. So your next stop is very difficult to sort of predict in here because this is not real. None of this is real. This is conflict trading. This propulsion gap is them getting out of that order. Yeah, it's this order here in reverse. So it's not real. None of this is real. So we're kind of, if you look at it, all-time high, or not all-time high, yearly high, if you like. So this is your, sorry, no, we're not. This is March high. That is January high. Okay, so that's yearly high. That's your quarterly high. So realistically, that's probably your next upside target where you're going to find resistance, because that's where real trading is. Although that's not real trading, that's Trump trading. Again, this is all Trump. Everything's Trump at the moment, but that's your most recent highs. So you got a good old 225 ADR. So it'd be lovely if we break out of that high today, because I think there we go, breaking out right now. Potentially we could get a nice little rally today. Easily just pop ourselves up and hold at 150 ADR, and then just wait for market structure, carry us higher. But we got to get through it, yeah? A lot of sellers in there, isn't there? Right, it's dud day. So I'm moving this up just out of vanity's sake. So I've moved this stop loss up so that it guarantees to bank me $150. Pound. I still haven't changed this. It's actually a pound account, but so basically that will get me just under $2,000. So it's a psychological barrier. I just do not want to lose $2,000 today. So I will lose 1,900 and something, or this will pop and I won't. That's all I can bet. All I can do today. It's not going anywhere. We are just rejecting highs. So rotation. I'm out flat here. I'll have a crack at this again tomorrow. And same here. Not interested in taking any more trades today. FOMC, dead market. that's all I've got for you today. So there's nothing much else to really look at. There's really little we can do today. So I'm just going to wait and see what FOMC brings. Keep your eyes peeled on this. Macklem is still talking. There's nothing coming out here at the moment that is of any interest. Let me just see if he's actually at press conference stage. I'm pretty sure he will be. Time 4:10. Oh, this is Besant. What am I doing? That's not Macklem. I thought Macklem would feed. That's the press conference. Okay. I was going to say, I couldn't see, but I was like, that's not Macklem. Yeah, okay, so they're taking press questions now. So just watch the feed, basically. The press questions are the ones that tend to be the big ones. So that potentially is something could drop, but the fact that nothing has been said so far, red, bullish, bearish, I would suggest that we're not going to get any movement off of that. So next movement today obviously will be here. That's not going to change. I mean, if it does change, it's going to be a big move. But if that does change, it will only ever go to 4.25, which will be bearish dollar. So the sort of worst case or best case scenario is dollar down. If dollar doesn't go down on that, this is where we're going to find out what's going on. Once that's done, that's what worries me. Trump is going to come out and have a go at Powell. But that's where we're going to get the movement. So somewhere around about 8 o'clock, we will start the press conference side of the questions from press. That's where we tend to get the juicy ones, which kind of give us real good forward guidance. So somewhere between 8 and 8:15, you tend to find you'll get movement if we're going to get it. I get the feeling we might do that. So we'll see. But that's what you got to worry about later. I'm back on Friday morning as usual. We'll trade the DAX. And I'm back on Friday afternoon. We'll trade the indices as normal. Yeah, but that's it today. So third day today. Nothing much we can do with it, is there? So before the FOMC press conference, if you've got any decent profit on that's to do with dollar, oil is also to do with dollar. Just be warned, we are rejecting those highs again. Just be aware, obviously, bank it before the press conference, because if you lose it, you can't get it back. You can bank it. If it goes against you, you can add it and take it again. Yeah. So I'm not going to do that with oil. And I've only got pound US dollar exposure on at the moment, and I've got no profit on the US dollar trade. So there's nothing for me to do with that today. So, all right. That's it. So I'll be back on Friday. Anything you need, I'll be in Discord or Telegram. Other than that, have a good day and good luck this evening.